Well, Matt, I know that you and I were excited to kick off earnings coverage this week talking about one of our favorite businesses out there. It's Square. Square reported, really, to my eyes, was a very good quarter. I mean, there were a lot of good things to take away. The stock certainly has been selling off since the release. Now, I think the point I was making over the weekend was, number one, the Friday sell-off really kind of took it back to where it started the week to begin with. And then we've seen some selling in the market today, which, of course, there's been some additional volatility with Square. It's never been a stock that looked cheap by any means, because really they are still getting started. So valuation has always been a key risk here. But when you look through a quarter like this and you see a lot of good signs there, but to me, the one that stands out with a company like Square, I always look to gross payments volume to get an idea as to how healthy the business is, how many people are using it, what is that volume looking like? And for me, I'm really encouraged here. I mean, that gross payments volume was up 29% from a year ago to $22.5 billion. And I like to put that into context with other players in the space. If you look at PayPal, for example, for the same quarter, their gross payment volume was $143 billion, and that was up 25%. So, Square looked like maybe they picked up a little bit of share there, a little bit of a faster growth rate there for Square. But all in all, I was very encouraged by the quarter. What's your take?
Well, you're right. Gross payments volume is still by far their number one revenue stream. One of the big reasons it sold off is growth kind of slowed down a little bit, 29% as opposed to 30% year-over-year growth last quarter, which 1% dip, we're not that concerned about it. I'm definitely not. The thing that really stood out to me was their subscription and services revenue. This is still a pretty small part of Square's business. It was about 19% of the revenue total. This includes things like their Caviar platform, Square Capital, the business lending service, the cash card that's linked to people's Square Cash app. Subscription services revenue was up 155% year over year. That's an amazing growth rate, and it's still a pretty small portion of the total. So if they can even maintain, half of that growth rate for a few more years, this could become a serious force to be reckoned with. Another one is hardware revenue was up, which, to be clear, hardware is not a big part of Square's revenue. It's about 2% of their overall revenue. But when they're selling more hardware, that means more sellers are adopting their product, which is a very good sign, especially their newer products that are geared toward larger sellers with higher payment volumes, like the Square Register all-in-one payment terminal, as opposed to the little card readers that you would see in like a craft market. So that's a very encouraging sign as well. Remember, Square's yet to really monetize their Cash app, which is, the most popular, in my opinion, of all of their products and services in terms of number of users. But having said that, this quarter looked really, really good. Just a couple of, like I said, a 1% slowdown in growth. I think their fourth quarter guidance was not quite what the analysts had been looking for, which we really don't care that much about guidance if all the numbers, look great from a long-term standpoint.
Yeah, and I mean, you mentioned the hardware side of the business. I mean, that's, for lack of a better descriptor there, it's kind of like the gateway drug, right? I mean, you give your merchant a taste of how easy that transaction process can be, but it's really just about getting that hardware in their hands so that they can experience how convenient and helpful the software side of the business can be. And I feel like that's where their secret really lies. And that's why we see them, we hear them talk so much about all of this different software they're developing for different particular markets, whether it's retail specific or restaurant specific. I mean, they do not look at this as a one size fits all. And it's really trying to, I mean, it's kind of a bespoke way of approaching things, I guess, but it seems to be working. Now, I know that one of the biggest questions in the near term for this company is going to be finding a new CFO, of course. Sarah Fryer getting ready to step down. I believe this was her last conference call. She's obviously been a rock star for the company up to this point. You have any feelings there as to whether this should be an internal hire that comes up, or do they need to look externally? Do they have a time limit here that you're looking at? I mean, is this something you feel like needs to be taken care of ASAP, or can we be patient?
Well, the sooner the better, especially in terms of the stock price. The market hates uncertainty in any form. Having said that, I have full faith that Jack Dorsey and his team will find the right person for the job. You'll know if the market thinks they're the right person by the stock's reaction after the announcement. But whether it's an internal hire or not, I have full faith that they'll find the person that they need to, and that in the long-term scheme, the grand scheme of things, this is going to be kind of a non-issue. In the intermediate term, I mean, Sarah Fryer has been an absolute rock star CFO, so it's going to be some big shoes to fill. But just the kind of growth potential of this company is bigger than any one person, and as long as they get the right person in for the job, I think they'll do just fine long term.
Yep. Sounds like Jack Dorsey is going to need the support of his team here. I'm sure he'll get it.